Hello, YouTube. Hello, X. How's everybody doing? Yeah, Mark, I changed the thumbnail. That was just a placeholder thumbnail. I just changed it out with a different thumbnail, with the real thumbnail. All right, let's look and see what the market's doing really quick. I was just checking out this NLSI. Anyone get any of this NEOS long short income? We can talk about that in a little bit. I have some more information on that. What the heck's going on here? Come on. Come on, Bitcoin. Am I just too zoomed in? Yeah. When you're zoomed in, everything looks bad. I mean, that's nothing. Nothing. Nothing to even worry about, right? Oh, well. All right. Let's look at the after hours S&P futures 30-minute chart. They're selling off also. Of course, let's look at NASDAQ futures. Same deal. All right. Well, that sucks. That sucks. All right. I have a good show planned for you guys tonight, though. So, tonight is the daily factor. But remind me, after the daily factor, we can talk some about this NEOS long short equity income fund if you guys would like to. I even tracked their trades. We can see how their trades are doing. This is called Index Income Wednesday. Okay, so basically, editor's choice. I just chose. I just chose the top 20 diversified funds. So no single stock BS, no gold, no silver, no Bitcoin, no Ethereum. Just stuff like I like. So ones that have at least 10, 15, 20, 30 stocks or more. All right, so let's just go in order of yield. I mean, XLKI, what's not to like about this one? It's tech. You got to love tech. Yielded 16.3% on the quarter, up almost 4%. IWMI, this is kind of like the stepchild to SPY-I and Triple QI. People always talk about SPY-I and Triple QI, but they seldom mention IWMI that kind of flies under the radar. Anyway, it yielded 13.6. NAV return for the quarter, excluding dividend, was 3%. It's not a lot of NAV return, but it's positive. I mean, not all of these can say that. All of these on this list can, because these were the top 20 best funds, or highest ranked on the max factor. The max factor really prioritizes safety, so you'll see a lot of really safe ones on here. Speaking of really safe ones, we have ones that a lot of people like and value for safety. We have T-SPY, 13.65% yield, up 1.87. Triple QI looking good. Also from NEOS, 13.47. So IWMI is paying 13.6. This one's paying 13.4. The NAV on IWMI looks a little bit better. Triple QI's NAV is only up 2.5%. Oh, well. All right, then we have XYLD from Global X yielding 12 with decent NAV, and then QYLD actually looks even more decent on NAV. Then we have Will. Will is a fund that does the Will strategy. I don't know how many stocks they have. This one may not really count for my diversified. Let's look up here. I mean, I think Will's all right. I didn't put any closed-end funds in. I didn't put any, because we'll have that on closed-end fund night. I didn't put, CLM, or even though it could have been included on this one. All right, so Will has some T-bills and some ARK, and Will just kind of looks like a fund of funds. But I think they do sell some option premium in here somewhere. It's probably just not the top 10 positions. They probably, anyway, whatever. Will's, there's a lot of green on this. A lot of people like this. It's, well, not really. It's only 23 million. assets under management. That's tiny. All right, but I do know people that like it. SPY is a good one, yielding 11.5, NAV positive. Big Y yielding 11.3, not quite as much as SPY. That's a bad look, Big Y, but Big Y has a little bit more NAV return. JEPQ yielding 10.17, but tons of NAV return. Then we have SOXY only yielding 10, but even more NAV return at 15. SOXY's just murdering it. Then we have GPIQ yielding 9.6, but NAV return this quarter of 4.25. Double QA, this is the equal weight of NASDAQ, yielding 9.5, NAV return of 3.7. SPIN, S&P Income Fund by State Street, I believe, yielding 8.3, tons of NAV return. GPIX only yielding 8, not very good NAV return. Then we have Triple QX yielding 7.8, SPUT yielding 5.7, QYLG only yielding 4.95. They only write cover calls on half the portfolio, so they should get tons of upside. But I mean, you know, compared to some of these other ones, they don't get any more upside than JEPQ, which has twice the yield and is safer, no doubt. Actually, is not safer, but whatever. And anyway, then we have Devo, only yielding 4.58, NAV return 3.4. Lots of safety though, tons of safety in Devo. Does not very volatile. Doesn't move around that much if that's what you like. All right, let's look and see who are the most stable. The stable champions. XYLD from Global X. I mean, I don't know. I mean, this thing is an example. Like I always say, stability is good. You don't want to be too stable. You don't want to be so stable your stock price never goes anywhere. You want it to be just volatile enough in the right direction. This is like too stable. Look at this. Hasn't even taken back its March. Now, that doesn't include dividends. That's just price action, but still, I mean, you know, that's not impressive at all when we're used to seeing something like Triple QI, which just barely did it, but it has taken back. I mean, it's when you pay a dividend, it's hard to take back an old high because, or I mean, especially if there's been a down market, because you have to make back the dividend every time. But eventually they did take back the old high. But yeah, all right, so let's go back over here. All right. On stable, yeah, there's Will at 1.3. Devo is also stable. SPY, GPIX, SPIN, all of these right here are super stable. I mean, the most stable being the Global X. I mean, the Global X ones, I mean, if 12% yield, I mean, they're just so stable when you compare them against other funds, they usually underperform. They're just an example of too stable, but nonetheless, I mean, that yield is pretty sustainable. When we're talking sustainability, you know, part of the create sustainability is not overpaying and not creating a lot of unwanted volatility, you know, compared to these other funds. Well, all right, so let's go ahead and rank this on sustainability. It's XYLD. That's not going to be editor's choice. So I don't even know how they came up with this. I mean, the metric, I mean, the stable DEX is a 198. This is the one we just looked at, though. It'll put you to sleep. It's like watching paint dry. It doesn't go anywhere. It's so stable. I mean, that's not the kind of stability I want. It sure went down. It dropped from 42 to 34. So it definitely went down as much as the market did, maybe a little bit more or around, you know, but, and then it you know, darn sure didn't go up that fast. So that's definitely not getting editor's choice. So we're tossing that one out of there. The reason it got up there mathematically is because it just looks at the last 90 days of price movement. The last 90 days of price movement looks like a dead guy's EKG. It's just straight or whatever, it's just straight across. There's no, now QYLD is also pretty darn unvolatile to 1.6, but still, then we have, SOXY. SOXY's obviously going to get it. Because I'd rather take just about 2% less yield and get more NAV return. It's not an apples to apples comparison. SOXY's concentrated, XYLD isn't. But yeah, SOXY's going to get it. You could go down here to something like SPIN, but on SPIN, you do get better NAV, but you get a lot less. You get a little bit less safety, and you get a lot less yield also. You can't have everything. This is kind of an example of it. But yeah, editor's choice tonight is SOXY. We're going to boot XYLD and QYLD out of the running, even though from a mathematical standpoint, they are killing it. They are absolutely killing it. Yeah, I got the thumbnail fixed. Mark is right. Let's get this back over here and right there. Less intrusive. Don't forget, this is not financial advice. Check anything you hear from me or otherwise with the licensed financial planner. All right, guys. Well, you guys want to talk about, did anyone buy the NEOS fund? Let me put this up. We could also look at the divas, but I wanted to talk about, here's the trade. Okay, so these guys sold this. This $1 million fund did this option trade right here. I have it actually right here. Let me make sure they didn't do multiple. No, they just did one. Okay, so not that there's anything wrong with that. These guys went out to generate some money. First of all, they own a long short portfolio of a bunch of blue chip stocks. They own the blue chip ones they like, and then they short some ones they don't like. But in any event, then at the same time, they sold the 6400 SPX that expires on the 18th, next Friday. Then they sold the 6330. Now that's pretty dang far out of the money. The 6400 is like 7% out of the money. And the 6330 is like 7.5% or something out of the money, but they only got like $500 for it, and it's $1 million fund. So anyway, hopefully they'll start selling more premium. Hopefully they'll start selling some more premium soon. Hey, I'm glad to hear that the M1 Pi slice is up 5.1. I wonder if I had BITK in there. That's a big reason for it. But in any event, I just thought this was kind of, I was surprised they didn't. Anyway, we'll see what they're doing. But anyway, so this was just the first day. And so I theorized, well, maybe they're going to do a tranche like this every day. $500 isn't a lot of money, but it's $500 times 220 is a lot of money. So that's how many trading days there are in a year. And I thought, okay, maybe they're just going to sell one of these tranches that goes out a week, because SPX doesn't just expire Friday. It expires every day. So today they did one that goes Wednesday to next Friday. Tomorrow they could do one Thursday to the following Monday. Then they could just do one, the same. And that would be what I think a smart way to do it. And that way, right here, this raises what's $500 on $1 million? It's not a lot of money. Even $500 times 220. What's $500 times 220? Mark knows what that is. Mark, put in the comments what $500 times 220 is. But that's what they're going to make, and this is $1 million worth of capital they're working with, because they have $1 million in their long short portfolio. So it's like 500 times 220 is, it's like 140,000, 120,000, something like that, right? Or is it only like 10,000? Anyway, it's not a lot of money. Yeah, it's like it's 110,000. So on $1 million, that's 11%. I mean, I guess that's all right. Yes, that's all right. They pay 11% yield. They sell something like this once a week, and then they own that portfolio of good stocks. And if they do a good job, picking the good stocks and shorting the bad stocks, they might do well. Okay, so let's think. So this is a $500 worth of premium, and 500 times 10 is 5,000. 500 times 100 is 50,000. 500 times 100, 50. So then double that would be 100. So isn't it? I thought it was like, gosh darn it. I used to be good at math, but I think I'm asking the question wrong. 500 times, times 220 though. I'm leaving off a zero. It is. It's like, hang on. Yeah, it's 110,000, just like Mark said the first time. Okay. So, but 100, so that's 11%. So that actually makes sense. I feel better about it now. I guess I must have miscalculated this morning. I wasn't calculating in that they had two tranches or that they did it twice. So that's why I was saying like 3 to 5%. So right there, if they do that once a week, they pay 11%, and they do a good job picking stocks. This won't add any losses to the upside. It won't cap any type of portfolio. I know you guys can't see that thing. Well, I did it right here. Whatever. I need to get better about that. But there's my receipts there. There's where we multiply 5. But anyway, so a strategy like this, though, that 11%, even though it's just 11%, ought to be spendable income. Now, it doesn't guarantee it'll be profit. If there's a few big down days in the year, those put spreads can be big losers, net losers, but they'll just pay you this 110,000 regardless of what happens. If it loses, then of course that's what causes NAV depletion, erosion, whatever you want to call it. But yeah, I think that might be compelling. A blue chip fund that pays 11%, and the options aren't dependent on the stock. The stock and the options are separate books of business. So I mean, the stocks don't get messed up by the options, is what I'm trying to say. That might be a decent idea. Anyway, I'm starting to kind of warm up to that in LSI. I'm going to wait and let them do a payment and see if it's, but I think 11% would get people interested. If they could pay 11, 10, 11, 12%, but I don't know. We'll see. All right. Max's Pie is iGold, Blocks. Okay. Well, Blocks hasn't been killing it. Chippy, TSLP, I'm glad I got some curve in there. IWMI, and that's really good because it's NEOS. KQQQ, that's good because it's Howard. SDTY is actually one of the better ones from YieldMax. And T-SPY, of course, everybody loves. And TLTW more for diversification's sake. But yeah, that actually portfolio is looking pretty good. I did a decent job picking that one. I'm glad that ULTY paid. Did anyone get to the bottom of what the heck happened? That was kind of crazy. So you've already got all your distributions for this week outside of XDT, which is a nice, good looking fund. Heck yeah. I'm glad Blocks is up 10%. That is awesome. I mean, I love the strategy of Blocks, but I'm also picking Blocks because of you guys and what I hear on the internet. I mean, crypto's not ready for crypto winter yet. We have another leg up in us. I'm hoping one more leg up. So that's why I'm in Blocks. But yeah, as soon as crypto hits 150 or 200 or something, as soon as it gets higher, I'll probably will cut a little bit of Blocks. Not that I don't love it, but take a little bit of profits in that one. But yeah, that one's fun. I should have been a wussy. I should have bought ULTI and just, I mean, even though it was ugly, it recovers. It's recovering fast. I should have just got some, but I don't know. I already had Blocks and ULTY, which are dropping like a rock every day, and I just didn't want to add ULTI on top of that. All right, TLTW went up a bit more today. Now that's actually good. Okay, so let's look at those. So But I'm glad Mark helped me figure that out because, yeah, 110,000 on a million, that's fine. 11%, that'd be a nice little fund. I just had it wrong. I didn't think it was that. I didn't think it was that much. So let's look at old TLT because that's really what matters for TLTW, in my opinion. And old TLT has looked pretty dang good lately. I mean, it's August, September, higher, low. We did in this last, make a little bit of a lower low, but whatever. This one has generally been good, although not so much recently. I mean, we could look at TLTW, but it's pretty much going to be the same thing as TLT, right? I mean, almost has to be. Okay, well, maybe not so good on that one, but on this one, I forget what day that we did the pie, but this one is looking good, at least over the past couple of days. So what else did I have in there? I had SDTY, which is one of the better YieldMax ones. And heck yeah, look at that thing. It's on fire. I mean, it's people always talk about how bad YieldMax is. That one doesn't look real bad. Now, to be fair, though, that one kind of does the same strategy or it does do the same strategy that Roundhill kind of invented, but whatever. That's a good looking chart there. Let's take it off. We take it off dividends. I bet it's going to matter quite a bit. We take it off dividends. The chart doesn't look terrible, but I mean, but yeah, let's do this. Let's turn it back on dividends. So apples to apples comparison. And let's turn it on. I think XDTE from Roundhill is very similar. And I think XDT really outperforms it. Typically, it depends on what time frame. But let's just run these together. Yeah, which one is XDT? The light blue or the dark blue? I guess I could just turn it off, turn it on. Okay, XDT is the dark blue. And actually on this, lately it's been, they're right together. They're very similar. Let's go back here and turn it on. I mean, one's up 31.7. The dark one's up 31.9. The light one's up 31.7. They both pay weekly. Wonder which one pays a higher dividend. And I wonder which one was down more in April. Oh, that was a bad time to bring a fund out. Whose idea was this? Probably Jay's idea. Friday, February 7th, 2025. Let's bring a fund out right before March and April. My gosh, that was lousy timing. Anyway, it's actually the Roundhill one that's behind to the YieldMax one. See that? Anyway, all right. But yeah, I'm glad all that's headed back up, and you have 15 shares of it. Your blocks position is relatively small. That's a good one. It can be relatively small because if a lot of people weight their portfolio by volatility, and you don't want the one that moves up and down 90% every year to be, 50% of your portfolio. You want the VU and the stuff like that to be the bigger percentages and the ones like whatever, your moonshot ones, to be less. Anyway, all right. I'm glad it's headed back up. I really am. I'm glad it's headed back up. But yeah, that SDTY looks better, I bet, than a lot of people thought. So what else is in there? T-SPY and okay. But T-SPY and KQQQ are tough also. Let's put T-SPY is also based on the SPY. Let's just throw it in here too. Let's just throw it on the same scale. Oh, T-SPY is like, I'm gonna curb stomp you guys. T-SPY is like, hold my freaking beer, bros. Sit back and watch this. Sit back and watch this. Good job, T-Spy. All right. Well, yeah, everything works. Everything looks good when the market's going up. I mean, now that the market bottomed and turned around and it's going up, all of these would have looked terrible if we were looking at them last week. You always feel like a genius when the market's going up. But yeah, man, that's a good job on T-Spy. All right, let's throw something else on here. Man, T-Spy is tough. I know it's not part of the comparison, but let's throw Big Y on there. I don't think it can compete with T-Spy. Let's see if we. Oh, Big Y. Hello, Big Y. Big Y's like, come on, bros. You guys hold my beer. Watch this. All right. Well, what else do we have on the list? What else did we have on the? But yeah, XDTs. I'm just clowning around on all this stuff. You guys know that XDT day in and day out is, and I've been watching it almost every day for. I mean, it's a good one. All right. So what else did I have in there? Oh, I had Chippy in there. How did I put? I mean, oh my gosh. No wonder the portfolio is doing well. And I had iGold and Chippy. I don't know how TSLP is doing, but anyway, yeah, that I bet that is a pretty good looking portfolio. I bet that is a pretty good looking portfolio. So let's do this. Let's put in. Let's put in some Q-based ones and see how that's working out. And so we're going to put in triple QI, and then I'm going to put in I guess triple QT, TDAC. What's another one to put in? A Q-based QDTE from Round Hill, and then we'll do QDTY from YieldMax. And now some of them didn't start at the same time, so. But anyway, let me throw in one more. So QDT, TDAC. We'll do QDTY to get a YieldMax one in there, and same price scale. There's some firepower in this lineup too. Okay, so let's go to where they were all together, which is right September. So what came out in TDAC, I think, came out in September. All right, boom, right there. All right, wow, look at that. TDAC's like the new kid on the block and is winning. Is that right? Yeah, TDAC. Is that TDAC? Yeah, I can't tell. But QDTY is also right up there. Where's QDTY? Oh, that's QDTE. There's too many colors. Gosh, darn it. Anyway, they're all right there together. It looks like QDT's actually had TDAC second, and then QDTY is third, and then bringing up the rear, we have whatever these are down here, triple QT and probably triple QT and triple QY. All right, let's take off the newbie. I'm going to take off TDAC, and let's go back here to win a little bit more perspective on this. All right, so going back a little bit further, it looks like we have, okay, that's triple QT. So that looks like third place. QDTE is first place, Round Hill. Good job. QDTY, last place or third place down there at triple QT. I mean, it's embarrassing that triple QT is getting beat because it only pays 20% and it's getting throttled by QDTE that pays 35% or whatever. It's not. I mean, that's not the way it's supposed to work. That's an embarrassment for triple QT. That is an embarrassment. Not over any period of time. It sure isn't. But anyway, I'm glad that I'm glad you're liking those round hill. That XTT is really tough. Long term, set it and forget it. Plus CLM, that's a hard combo to beat. So diversified. You're just rooting for the market to go up at that point. It's not, you aren't in any sector. You have the, XTT, you have the S&P 500. Just want the market to go up, or at least not crater. And it's fine. I don't know. I really haven't looked in on the target 25s. I don't know. I don't think we have enough data to see, but pretty sure they're going to do better on NAV and worse on yield. But I haven't done any studies to see when they turn 3 months old. We'll see if they have better risk adjusted reward, and I bet they do. I bet they go to the top of the max factor ahead of the other full pay yield max funds. I'm not saying they'll be the best funds out there. They'll go to but I think it'd be a natural they would go higher, because the max factor really prioritizes safety, maybe a little too much. But I don't want the max factor. I don't want something behind the max factor and to be super risky. And, I think the max factor does a good job at really prioritizing safety. Anyway, and I think we use the max factor to help inform that decision that on that target portfolio, but also I use my judgment, because blocks is never that highly rated on the max factor, not usually, but iGold is usually. I chose iGold and I chose a lot of that off the max factor that night. Now that I think about it, that's how I got TSLP, because it was one of the highest ones on the max factor. Let's let's do it like this way. Duplicate. TSLP. I want to see how TSLP is doing. All right, and I just wanted to see how it was doing, but look at that. I mean, lining it up with these other funds. Of course, when it's down a lot more. It was getting crushed back here. Look at how much more it dropped than the diversified ones, the relatively safe ones. You can see right here, it looks like the relatively safe ones were down at worst 31%. And some of them, were down less, 18, 20, 30, something like that. It's been a heck of a year. I'm glad we're rallying into the end of the year. I'm glad ULTY finally paid. Hey, Mark, I'm glad to hear that. Mark says he uses them. In case people are just listening on the radio, Mark just said, Max, I use the max factor to help verify that I'm in the best funds. And I think it is a good backwards looking metric. And it cuts the BS out of there. You never see something highly rated in the max factor because it pays 1,000,000% but has negative NAV. No matter how, it gets rid of all that stuff. So yeah, I think it does a good job pointing towards the better ones. Yeah. Anyway, trust but verify, just like our friend President Ronald Reagan said. Trust but verify. I don't know. I really think it's a math game. It's a math. Any of these funds are a math game. The more that they're paying you, the more of a deficit the fund's NAV starts in. Yeah, some of these guys are better at allocating and stuff. So that's where the skill comes down. But I really think if you're going to pay 70 or 80%, it's always going to be challenging. I don't know. It's just a wait and see for me, but it's a wait and see for me. Hopefully so, though. Hopefully so. I just don't want to give people false hope, but hopefully so. But I really wish I would have more confidence in saying that if they would bring the yield down from 80 or 70 to 60 or 50. And I know that's not what a lot of people like, but then I think, or just bring it down to 60. It paid 77. Bring it down to 60. And just by putting even more stable stuff in there, and then yes, I think that would help long term. But I think this is just window dressing. It's still the math that's still working against him. Anytime the yield's this high, and the math is still working against you at a 60 yield, it's just not as much. It's why there's funds out there like FEPI that pay 25 and still are pretty darn stable, because they pay a lot, but they don't just pay so much. It's kind of the same situation that XDT and QDT are in. They pay like 35%. It could be the same thing that's happening to QLDY. It pays 30%. K-Yield pays 30%. It could be that 30% is about the physical maximum these funds can realistically withstand. And so any other ones that are paying more than that, it's just it's a real tax on the structure of the fund, or not a tax. It's hard on the fund. Anyway, all right. Mark says, and you know what? I'm heavy in a bunch of Roundhill Weeklies, which have been consistently. Yeah, I got to say, when I look at this, and we haven't looked at this yet, so let's look at this. When I look at this, it's not updated with today's info, but I'm feeling really good about allocating to WPay. And I added more of it last week or something, not low enough. I didn't buy the dip like I was supposed to, but I added more WPay, and I added more WPay, more K-Yield, and more QLDY. And I left the other ones. I didn't sell anything else. I left the other ones where they stand, but I put some cash to work. But in any event, yeah, WPay, down 8%. Now we can't say that. Now even the Qs are up for the month, or no, the Qs are still down a quarter point for the month. But these things need to recover. That month was bad. These things need to recover. But I have full confidence that WPay and K-Yield will. I'm not so sure about these other guys. Blocks probably will, but. But no, K-Yield does a great. What? Here's my thing. I like K-Yield. I think they're doing a good job, and WPay on most days competes with K-Yield. It seems to go down and about up but so I'm just looking at and it seems to be So I'm liking WPay. I got to say, I agree with you. I'm liking WPay. I'm glad I got it. I'm really liking QLDY. I'm glad I got it and added to it, but I'm fine with K-Yield. I think K-Yield's good. Yes, I'm not real happy with my ULTY. I'm not super happy with my blocks. I didn't buy ULTI yet, but yeah, I think I'm pretty solid ground with K-Yield, WPay, and QLDY. These high beta ones will be back. I'm not upset with them, but I kind of have my feelings hurt. All right. Agree to stabilize. You've got to reinvest like 80%. Well, that's another thing too. Okay. But that's a good topic. QDT seems to start more stable for income without reinvesting. Yeah. So that's another thing you can, and that's in my last video where I was trying to show the future value calculator of ULTY. You can simulate ULTY pays too much money. Anything that pays 80 or 90 is too much money, but you can simulate not having them where they don't pay it. It'd be just by, only spending a quarter of it and re-dripping 3/4 of it back in. Anyway, and when you do that, depending on the market, when you do that, especially into a strong market, you do a little better. But you kind of, but you don't let them overpay you. But somebody was saying, isn't that stupid? And yeah, it is stupid. I always say, just use these for the income you need and don't buy any extra. So somebody in my Discord was saying, well, why would you drip? And he's right. But I was trying to simulate if you had one of these and just didn't accept all the money. You could also take the money and put it in SPY, or you put it in T-bills. It doesn't have to be back in this, but it has to be still invested somewhere. So anyway, that's all I was trying to do. But Tom made a point, and it's a good point. Anyway, all right, you have 250 to 1,000 of each round here. Yeah, you have some of the better ones, or which one do you have? Like, hey, Greg, what's up, man? Don't you have? I'm trying to think. you have COIW, right? But you aren't happy with that one. I shouldn't have mentioned that one, but I think you do have that one. But don't you have some ones? You have AMDW too, Mark, don't you? And I think you have some of the ones that are doing well, I should say. Anyway, yeah, I don't know. I can't believe Alti can't squeak out a gain. What in the heck is going on with Alti today? It's been doing well lately, but come on, Alti. Maybe it paid a dividend and I didn't put it in the thing or something, or a WinX or something. It's got to be an error. You guys, let's look at my spreadsheet, my version of this same spreadsheet. I'm going to bring it over there. I just can't believe. When did ULTY go ex dividend? Well, when I have, the only thing I have going X today was WPay. And I know X day is different from payday. So you guys are more concerned about payday. I'm concerned about payday too, but I need to know when X day is. But so ULTY, the last time they paid was on the 3rd, or the last time they went X was a Wednesday. Yes, I missed an X day, and that's the only reason they're down. Son of a gun. Okay, well, they weren't really down, though. What did they pay for a dividend? They paid like 54 cents or something, right? Last time was 58 cents. I'm just going to put that in to hold the place. If it's different, I'll go at it later. But that changes them to, yes, heck yes, positive 1.9. I don't know how long it'll take to go through to this. But I'm getting a lot better at my AI integration and stuff like that. Come on. Yep, there it is. Look at that. 1.19. Okay, so they were still the low man on the totem pole, which I'm used to that, but I was kind of disappointed they were showing down. All right, well, now WPay, they must have just had one of their ETFs that sold off or something, but this one's usually real steady. Maybe did I miss something on WPay too? I guess let's go look at it. Now, WPay paid today, so I shouldn't have missed it, right? WPay right there, 53 cents. So I guess they were down anyway. They were at 47.43. Then they dropped to 46.51. They dropped, that's 90 cents, 88 cents, and then they paid 53 cents. So yeah, it looks like they were actually down today. Yeah, okay. So I knew I was right about AMDW. I did not know about ARMW. AVGW has been a monster. Oh, not to mention GOOW. Oh, when you got rid of COIW. Okay. All right. I thought, okay, well, that's awesome. You have all the good ones. Yeah, you have all the good ones. Yeah, I got you on that, Mark. Greg says QLDY was up 28 cents on X day. Add another 19. Did I miss that one also? Got started. Yeah, I did, because every Wednesday and Friday, right? I mean, they go X on Wednesday and Friday, so of course I missed it. My gosh. Okay, yeah, you're right. So I'm just going to put in what the last one was. It's probably close. I'll go add the real one after I get out of here. But if I don't, I just always add what the last one was. Now, you notice I've been around long enough, we've been around the block long enough on ULTY to cut some off the last one. I mean, I don't know if it's really 54, but also I think I heard that somewhere. The week before that was 59. The week before that was 64. The week before that was 62. They went up one time there. But yeah, I haven't been happy with this one either. This one's not tickling my fancy either lately. All right. Well, so let's go back here to the performance dashboard. And now let's hit refresh, and they should all be right. So we verified WPay is right. Unfortunately, it is down, I guess, in real life. But QLDY, now look at this, how it changes the lifetime performance. QLDY is right there, down 44 bips, where the Qs are down 23. I mean, that's all right. Yes, it has is of late. Like, I'm not talking bad about it either. I'm trying to stick to the facts and not my feelings. ULTY has been resilient, especially as the Qs. I do think 70% is achievable if you consider the leverage they may be manufacturing. Yeah, I hope you're right. QLDY achieves 40% consistently. Yeah, they do. TDEX 17. I have no doubt they can do that. You know, GPTY. There's a lot of funds that pay 30 and stuff, and they're just killing it. Yeah, I didn't realize QLDY was up to 40, but part of QLDY's magic to their madness is they're uncapped. Unfortunately, ULTY, you know, anyway, it's. But yes, it's doing a lot better. It's doing a lot better. But yeah, I do imagine that, Mark. If ULTY paid 40, situation solved, the NAV might actually grow. Yeah. No, yeah, 100%. 100%. And if the market was down, you know, okay, the NAV would shrink, but not at the rate it does now. Yeah, that's 100% solved the problem. But, you know, some people there's probably a market. There's still a billion people that have this, where there's been plenty of time to sell it, and a lot of people did. It went from 3.3 to 1.3. So there's 2 billion sold. But I think the people now that are in it pretty much know what they got. I think this summer there was people that, you know, maybe, but I'm saying I think all those people have figured out, and they've either decided I'm going to stick around or cut it loose. Yeah, but we'll see. I mean, the changes are, you know, step in the right direction for sure. Step in the right direction. All right, guys, so I'm going to get out of here and go do some other stuff. I don't know what I'm going to do. Oh, yeah, I'm going to cook brownies. I bought brownies tonight at the store, and I'm going to go make a box of – I got some – I love brownies around the holidays, and I love it's either Duncan Hines or Betty Crocker. I forget which one, but I just love box brownies. Anyway. All right, guys. Hey, well, I appreciate you all being here. Thanks for watching my NSLI show. I'll be back in the morning about 9 o'clock with the live show. No, not those. Not those, just the regular kind, fudge brownies. All right, guys. Hey, thank you guys so much, and you guys have a wonderful day.